Welcome to your daily market briefing. Here are the key headlines shaping today's markets. 1. SCOTUS kills IEEPA tariffs. 10% Section 122, levy now effective. 2. German election delivers CDU-SPD coalition, defense spending catalyst. 3. Anthropic AI scare and tariff chaos slam U.S. equities. After the headlines, you'll find a global market snapshot and a forward calendar of what to watch. Before we turn to today's stories, a short introduction. Daily market briefing. Think ahead, every market day. Subscribe to stay focused on what matters. Please keep in mind that all content in this video is for educational purposes only. It provides market context, not financial advice. 1. Trump escalates. 1. SCOTUS kills IEEPA tariffs. 10% Section 122, levy now effective. Primary asset classes impacted. U.S. and European equities, S&P 500, Dow, NASDAQ, Stocks 50, exporters. UST curve, 2Y, 10Y, DXY, and USD pairs, EUR/USD, gold, VIX. What happened? SCOTUS struck down IEEPA tariffs 6-3, ruling Presidential Emergency Tariff Authority unconstitutional and invalidating approximately $165 billion in levied duties. Trump signed a replacement 10% global tariff under Section 122 effective today, signaling intent to raise to 15% but without a formal order. The EU froze ratification of the Turnberry trade deal, citing the changed legal basis. Why it matters. The ruling constrains executive tariff authority but does not eliminate it. Section 122 caps tariffs at 15% for 150 days without congressional extension, far below the IEEPA regime that enabled 145% on China. The gap between the 10% in force and the 15% ceiling creates a live pricing variable. The EU freeze signals transatlantic trade must be renegotiated under the new legal framework. Net effect: lower peak tariff risk but elevated uncertainty as the effective rate remains fluid. Key numbers to remember. SCOTUS ruled 6-3. Roberts, Gorsuch, Barrett joined Liberals. Approximately $165 billion in IEEPA tariffs now subject to potential refund claims. Section 122 replacement. 10% effective today. 15% signaled but not formalized. Legally capped at 150 days without congressional extension. EU froze Turnberry deal ratification, originally agreed at 15% in July 2025, forcing renegotiation under new legal basis. What to watch next? Trump's State of the Union tonight at 9 p.m. Eastern Standard Time will signal the tariff strategy pivot and whether the 15% order is imminent. Consumer confidence. Wednesday tests whether household sentiment has deteriorated. Treasury's $69 billion two-year auction today gauges demand amid lower yields. Congressional moves to reclaim tariff authority or approve Section 122 extension would fundamentally alter the trade framework. Friday's PCE deflator provides the next inflation data point relevant to Fed timing. 2. German election delivers CDU-SPD coalition defense spending catalyst. Primary asset classes impacted. European equities, DAX, Stocks 50 defense sector. Bunds and peripheral spreads, Euro to USD, European fiscal trajectory. What happened? CDU/CSU won with 28.5%, securing a two-party coalition path with SPD at 16.4%. AFD placed second at 20.8%, but remains excluded. FDP and BSW failed the 5% threshold, simplifying coalition arithmetic. DAX futures rose 0.9%, and EUR/USD gained 0.5% early Monday before tariff-driven reversal erased gains. Defense stocks rallied on Mertz's 5% GDP commitment. Why it matters. The CDU-SPD coalition represents policy continuity on European integration and fiscal reform. Merz committed to reforming the debt brake for defense and infrastructure, but AFD's blocking minority means constitutional amendments require broader negotiations. Energy cost reduction through tax cuts is achievable near-term, directly supporting German industrial competitiveness. The fiscal expansion path implies higher Bund supply, potentially widening peripheral spreads. Coalition negotiations will determine the pace of debt brake reform and the scale of defense procurement acceleration. Key numbers to remember: CDU/CSU 28.5%, AFD 20.8%, second place excluded, SPD 16.4%, worst post-war result, Greens 11.6%, Left 8.8%, voter turnout at 82.5%, highest since reunification in 1990. FDP and BSW both below 5% threshold. CDU-SPD coalition holds Bundestag majority, but lacks the two-thirds supermajority needed for constitutional debt brake reform without third-party support. What to watch next? Coalition talks begin this week with debt brake reform as the key variable. A special fund avoids constitutional hurdles but limits flexibility. Full reform requires a supermajority the coalition lacks. ECB speakers Tuesday and Thursday may link German fiscal expansion to monetary policy, repricing euro rates. Bund auctions will test market demand for increased supply expectations. The coalition agreement timeline sets the pace for the European equity re-rating, particularly in defense, infrastructure, and industrial sectors. 3. Anthropic, AI scare and tariff chaos slam U.S. equities. Primary asset classes impacted: U.S. equities, NASDAQ, software, cybersecurity, financials, U.S. T-belly, 5 years to 10 years, gold and silver, Bitcoin, private credit, BUG ETF. What happened? U.S. equities sold off sharply Monday as the new Section 122 tariff compounded AI disruption fears triggered by Anthropic's Claude Code security tool. IBM plunged 13%, CrowdStrike fell 10%, Cloudflare dropped 8%, and the BUG ETF lost 9%. The Dow fell 1.7%, with financials down 3%. Gold surged 3% above $5,200. Yields dropped 7 basis points and Bitcoin fell 5%. Why it matters? The sell-off reveals markets repricing two simultaneous risks: tariff-driven margin compression and AI-driven business model disruption. Anthropic's tool automates vulnerability scanning and code auditing, directly threatening cybersecurity and enterprise software revenue streams. Defensive rotation into healthcare, staples, treasuries, and gold, while financials and tech decline suggest positioning for slower growth. Private credit stress surfaced as Blue Owl halted fund redemptions. The S&P 500 is now flat year-to-date, while international benchmarks significantly outperform, reinforcing the U.S. exceptionalism unwind. Key numbers to remember: IBM minus 13%, CrowdStrike minus 10%, Cloudflare minus 8%, Bug Cybersecurity, ETF minus 9%. Anthropic's Claude Code security is the specific AI catalyst. S&P 500 minus 1.0% to 6,837.75, now flat YTD. Dow minus 1.7%. UST 10Y fell 7 basis points to 4.03%. Gold plus 3% above $5,200. International outperformance: StoxX 600 plus 6%, FTSE plus 8%, Nikkei plus 12%, YTD versus S&P flat. U.S. exceptionalism unwind accelerating. What to watch next? State of the Union tonight provides the next tariff catalyst. NVIDIA earnings. Wednesday after close are the critical test for AI capex sustainability and whether the Anthropic scare broadens into a full AI repricing. Consumer confidence. Wednesday indicates whether tariff and AI anxiety is reaching households. Fed speakers this week signal whether the growth slowdown changes rate path calculus. Private credit contagion risk bears monitoring if Blue Owl's redemption halt triggers broader alternative credit withdrawals. This global market snapshot is designed for quick reference. You may pause the video to examine the data more closely. This forward calendar section is designed for quick reference. You may pause the video to examine the data more closely. Thank you for watching today's briefing. In markets, understanding the field matters as much as making the move. And that's the perspective we aim to provide. Subscribe to Daily Market Briefing and turn on notifications to stay focused on what matters every market day.